Hey everybody, today I wanted to start a video series where we're going to be walking through each of the primary financial statements, the balance sheet, income statement, and the statement of cash flows. We're just going to take a quick look at what each of those looks like and the purpose behind each of them, and then in the coming videos, we'll dive a little bit deeper into those. And I'm going to talk about the very first number that I look at on each of those financial statements. So let's dive in. The first one we're going to look at is the balance sheet. The balance sheet is basically a list of your assets right there. Then your liabilities right there. And finally, your owner's equity right there. This one down at the bottom is the total of equity and the loans. So that's what the balance sheet does. It basically outlines those three things: assets, liabilities, and equity, which is the fundamental equation for accounting. Our next financial statement is the income statement. But what I want to show you about the income statement is this. Again, it's just simple math. It always starts off with revenue. And that is always going to be the top portion. A mistake a lot of people make is looking at that as really their big item, the most important item, and it's really not. The next item are costs or expenses, and those are listed here and also here, and in the other section as well. So it's listed in a number of, there's several of them there, and we'll go into why it's broken up like that later in the series, but that's the basic fundamentals of that. And then down here at the bottom, we've got net income. Okay, now the last financial statement that we're going to talk about today is called the statement of cash flows. And the way that I like to describe this one is it's basically showing you the cash activity that has taken place for your business for whatever time period it may be, whether that's a month or a year or a week, okay? And it's broken up into three different primary sections, and they are the operating activities, investing activities, and finally, financing activities. So those are the three financial statements. So each of them has their own purpose. Let's just kind of recap real quickly what we talked about. The balance sheet, basically what the balance sheet does is it tells you what your worth is, the worth of the business. The income statement tells you about financial performance for the business. And the cash flow statement basically describes what's going on with your cash in the business. And we will dive a little deeper into each of those later on down the road. And I look forward to hearing any comments that you guys may have and questions. And, hope you guys have a great day. And I hope that this was helpful to those of you out there that struggle to look at financial statements.